What's up everyone, and welcome to another Lutheria tutorial. In this video you will learn how to identify a bull trend on your favorite crypto assets so that you can ride the momentum upwards of these trends and elevate your profit potential. So let's start off with identifying the four key elements of a bull trend. We start off with a low, then we need to form a high, then we need a higher low, and then finally a higher high. So let's break down each one of these so that you can identify them. So how do you know that a low has been set starting off? Well, first we need to know the price is going down. And the way that we know the price is going down is by breaking a candle's low. So right here we can see that we have an inside bar candle contained inside of this previous candle, and we break this candle's low right here with this black candle. Once we know the price is going down, now to identify a low being set, we need a high of one of the candles that are going down to be broken by the following candle. And we see that right here with this wick going above this pink line set at 34,342 of this black candle. And that sets this wick, the bottom of this candle here, as our low. So now we know that the price is going up, and the way we know the price is going up is because we broke this candle's high right here, so the price is pushing upwards. So then as we're going up, we're looking for a high to be set. That's the second element of our trend. And to identify a high being set, we are going to be looking for the candle's low to be broken. So we can take this pink line, and as a guide we can see that if we move this up, none of the lows of these candles are being broken by the following candle until we get to this white candle right here, and this black candle goes right through it and then makes this our high. So we come up, and for a low we're going to be looking for a V formation, and for a high we're going to be looking for a mountain formation, kind of like this. So a low is going to look like that, and then a high is going to look like that. So in this case we come up, we form a high right here, and then we're coming down. Now we know we're coming down very similar to the low because we broke a candle's low right here. So we're coming down, and now in the same, in this brief moment, we're now going to be looking for the candle's high to be broken to know that we've set a low, because the third element we're looking for in our bull trend is a higher low. And this is signifying to us as an investor or trader that the selling momentum is weakened and the bulls are in control, because this drawdown did not lead to a lower price than the previous drawdown that we had here. That's why it's labeled as a higher low, because this low is higher up in price than the previous low. So now that we know, so how do we know our higher low has been set? We're looking for the high to be broken, very similar to down here when this high of this candle was broken by this white candle. So once that is broken right here by this white candle, we know our higher low has been set, and that's the third element we need for this trend. The final element we need is the confirmation, and that's a higher high. And the way we identify that is we need a high to be set above the previous high in this four-step sequence, and that's what we get right here. And the way we know that is, once again, we're looking for a low to be broken for a candle, and we get that right here with this black candle going below 44,961, making this our higher high. This is signifying to us the momentum is in the bull's favor because we set a low, we rallied, we set a higher low, meaning the selling momentum was weakening, and then we set a higher high, signifying that the bull's buying pressure is strengthening. So that's the four-step process to identify a bull trend. And the last thing I will mention is when you set that higher high, you want to make sure that you get two candle closes above the key high right here. So the first high in your four-step sequence needs to follow with two candle closes after that. And the reason you're looking for the candle close and why that's important is because sometimes what will happen is the whales in the market will push the price above a key high and then close the candle back below it, faking out the breakout traders, the people that are willing to buy once you supersede that high, and then they're going to dump the price thereafter. So you need to see two candle closes above the key high to confirm that trend, and you can see in this case, once we confirm that trend, it was higher prices after that point. So I hope this tutorial was helpful for you. If you liked this video, please give it a like down below and subscribe for future educational content around cryptocurrencies and blockchain technology. And until next time, onward and upward.